Hey everyone, welcome back to Corporate Decoder, the place where we unravel the confusing world of finance, and today we're looking at MDU Resources Group and a little update they filed. Let's just say this update involves a lot of zeros and can really set the stage for a company's future borrowing power. Pretty important stuff, right? Before we dive in, if you enjoy getting clear, no nonsense insights from these corporate filings, make sure you are subscribed. We also have a fantastic community over on Discord, linked in the description below, where we break down these kinds of things and more. Alright, so what is the big news from MDU Resources Group Incorporated? On the 11th of December of 2025, they filed a report about a major change to their borrowing agreement. Think of it like refinancing your house, but for a big corporation, they basically extended a deal that lets them borrow money. This document is called an amended and restated credit agreement. Basically, they took an old loan agreement from May of 2023 and updated it. The most significant change here is that they pushed the deadline for when they have to pay back the money they borrowed, or at least the commitments to borrow, from May of 2028, all the way out to December of 2030. This gives them a lot more breathing room, which is usually a good sign for financial stability. The original agreement was for a 5-year revolving credit line. Think of a revolving credit line like a credit card for a business. They can borrow money, pay it back, and borrow it again up to a certain limit. This original agreement had a limit of $200 million. And guess what? That initial commitment amount is still the same at $200 million. They also have a facility for standby letters of credit, which is like a guarantee that they can pay certain obligations, for $25 million. And another sub-facility for even quicker, smaller loans up to $25 million. What is interesting is that they can actually ask for more money, up to an extra $50 million if they need it. And they have the option to ask for extensions on that repayment deadline twice, each time for a full year. This suggests they're planning for the long haul and want flexibility. Now, every loan comes with rules, and this one is no different. They have to follow certain rules called covenants. One of the big ones is a financial rule. They can't let their total debt be more than 65% of their total capital. This is a pretty standard way for lenders to make sure a company isn't borrowing too much and putting itself at too much risk. If they break this rule, it is considered an event of default, which can lead to some serious problems. The cost of this loan, the interest rate, isn't fixed. It changes, or it is variable, and it depends on MDU Resources Group's credit rating. Basically, if the company looks financially strong to outsiders, they'll get better rates. There is also a facility fee, which is like an annual percentage fee on the amount they can borrow. And right now it is set at 0.175%. As of the date of this filing, the 11th of December 2025, they actually had about $33.8 million borrowed. They also had about $1 million in letters of credit already issued. So they are using some of this borrowing power, but they still have a lot available. It also mentions that some of the banks and financial institutions that are part of this loan deal have also done other business with MDU Resources Group in the past, like investment banking or other financial services. This is pretty common in the corporate world. Lenders often have other relationships with the companies they lend to. This next part just basically says that the information we just talked about in item 1.01, which was about entering into this new loan agreement, is also relevant here because it creates a direct financial obligation for the company. It is like saying, hey, these new loan terms count as a big financial commitment. And finally, we get to the exhibits. This is where they list all the supporting documents. The most important one here, Exhibit 10.1, is the actual amended and restated credit agreement itself. This is the full detailed contract. They also mentioned they omitted some schedules and exhibits, which is pretty standard practice, but they're willing to provide them to the SEC if they ask. So what does this all mean for MDU Resources Group Incorporated? Essentially, they just secured a more flexible and longer term line of credit. Extending the maturity date to 2030 is a big deal. It means they don't have to worry about refinancing this large chunk of potential debt in the immediate future, allowing them to focus on their operations and long-term strategy. This is a sign of confidence from the lenders, or at least a willingness to continue supporting the company. The fact that they can increase the commitment amount and have extension options shows they are managing their finances proactively. The covenants, like the debt to capital ratio, are important to watch. But 65% is a level many companies operate comfortably within. It demonstrates good financial discipline. Looking at the broader picture, this renegotiated credit agreement provides MDU Resources Group Incorporated with enhanced financial flexibility. This is crucial for a company that likely operates in capital intensive industries. Given its business segments, having a longer runway to manage its debt obligations allows for more strategic investments, potential acquisitions, or weathering economic downturns without the immediate pressure of repayment. The key takeaway here is that MDU Resources Group Incorporated has successfully structured its borrowing capacity for the next several years. The lenders trust the company enough to extend these terms, which is a positive signal. While we don't see specific dollar figures for future revenue or profit in this particular filing, securing favorable borrowing terms directly impacts a company's ability to invest, grow, and ultimately generate shareholder value. The risk here would be if their core businesses falter, making it difficult to service this debt even with extended terms, but this filing itself doesn't point to immediate distress. Alright, that is our breakdown of this MDU Resources Group Incorporated filing. What is your take on these extended credit terms and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.